GM, it's Blake here. As always, none of this is financial advice. Let's get it kicked off here. We have the SPY pulled up here on a weekly time frame dating back to 2011, and you can see this past week we closed below the cloud and, for a second peeked our head just above to open this week. Was a very nasty week to close it out with, closing near the lows below a declining 50 week and now below the 10 week moving average. So on a weekly time frame, technically we are in no trend, so not what you want to see. On the daily time frame, you can see we got rejected at the 200 SMA, failed at the declining trend line, and trend line isn't necessarily a change of trend, but just indicates the rate of change for the downtrend has changed. And you can see again we've got rejected at the downtrend and then back below the 200-day moving average, gap lower, and then gap below the 50. So right now, this price action is setting up for not a Santa Claus rally this year. Santa Claus rally is when we'd have a rally towards the year end. This does not look to see, in my opinion, this price structure does not look to be healthy for the market. Now, do I think we're going to crash and roll over? Do I think we're going to rip higher? I don't have a crystal ball, but I do know that this price action does not look bullish. So my expectations going into the end of this year are not to the upside. One thing I wanted to point out with the NASDAQ, so the NASDAQ has been relatively short, or I'm sorry, relatively, reading my notes over here. NASDAQ has been relatively weak compared to the rest of the market. You can see didn't even come up and tag the 200-day moving average, but more importantly on the weekly time frame, yeah, you can see back below the 200-week moving average on the NASDAQ, and that hasn't happened. Well, you can see we're already back in 2011. This didn't happen until the previous crash back in 2009. So, very important moving average, in my opinion. If we start closing below this and take out, these lows, yeah, this was a long-term bull market. So, yeah, with the Fed tightening, pulling liquidity out of the market, and on top of that, raising rates, making it more difficult to acquire capital, and the cost of borrowing is going up. Yeah, not conducive for markets. So, we have to go into 2023 a little bit skeptical. And, even though we just had, a pretty nasty 2022, doesn't mean that things in 2023 are necessarily going to be any different or any better. Now, of course, it's a new year, but my expectations for this next year currently are not to the upside. Now, what would change my tune? If we get back above this 200-day moving average and then back above, this 410 pivot up here, yeah, that would definitely, set up for a long, obviously. But until that happens, still looking to see lower prices in the longer term. Let's take a look at some precious metals. Silver, we added to the portfolio. Let me get rid of all of our annotations. Silver still is looking pretty strong here, relatively speaking to the rest of the market. Gold as well, holding the top of the cloud, but you can see right at that 200-day moving average and sitting at a 0.382 fib retracement from these highs to these lows. So you would expect to see some sort of stalling that we're seeing here. So this price action does make sense. Relatively speaking, though, still stronger than equities. Just to wrap up, let's take a look at the Dow Jones. You can see the Dow Jones was leading, bull flagged, and now we're back to the bottom of the cloud and sitting on this 200-day moving average. So if the Dow rolls over, if we break below this 200-day moving average, which is roughly 324, 325, call it, for DIA, that would not be constructive for the market. So we would have the NASDAQ in a downtrend below the 200-day, and also what was previous leading industrials. It'd be tough to find where, what's going to try to help keep the market up. So very important that we keep an eye on this Dow Jones. 200-day moving average, very, very important level, and currently being held by support with the 50 and the 200. So going to have to keep a close eye on that heading into the end of the year. Just to wrap up, again, we are in a downtrend. We are below the cloud. It's been a, really difficult, 2022 year for swing long trading, right? So we've only had, a handful of good uptrends this past year. Not expecting to get another one heading into 2023. So like I said, earlier this month, hey, if you've had a good year, awesome, fantastic. Do not press those gains. And on the contrary, if you've not had a great year, also, you don't want to exacerbate that either. So heading into 2023, fresh and open-minded and looking at the market anew. And so that's all I got for you guys this week. We'll see you on the open.